good morning, good afternoon, and good evening, folks. If you guys can hear me well and if you can see my screen, please give me a sound check and a screen check so that I know. There you go. Thank you, Andreas. Thank you, Amutha. You guys are well ahead of the game than anything else, really. And thank you for being here. And thank you, Ursula Maru. Again, I appreciate all the feedbacks and all the questions from you guys. And more importantly, you guys being here every single week because you wanted to learn, and then I'm sure there is a lot of value that you find in our webinars, which are really bringing you back. A bit about myself. My name is Naeem Aslam. I work as a Chief Market Analyst for AvaTrade. All the research that you see on a daily basis on our website is done by myself. That includes YouTube channel as well. Today, I am down with a very bad sore throat. Unfortunately, I have been under this sore throat for the last few days and high fever and so, but today feeling much better. Nonetheless, we will have our master series of these webinars, and in today's topic, we will be looking at stocks because obviously I think once again this comes at a very, very good time. Because remember, last week we discussed about cryptos, and that came at a time when cryptos were really kind of melting down, and at the same time we also had a signal of cryptos moving to the upside, so that was very, very timely. Now we are looking at the stock market, which is really melting in the last few days. We have seen a big sell-offs, and now the big opportunities are here. So these are two very, very timely webinars in line with the market, what exactly is going on. As always, very, very briefly, I need to go through some housekeeping, and that is about risk warnings and disclosures, which is right in front of you. If you guys have any questions, feel free to come back to us. Our handle for Twitter is EverTrade, and that is the same name for YouTube channel as well, where we post our daily analysis for your reference. Very briefly about AvaTrade's unique technology. EverProtect is a revolutionary one-click risk management tool available on AvaTrade Web Trader and AvaTrade Go app. With EverProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, EverTrade will reimburse the loss directly into your trading account. The only cost is the EverProtect fee itself. So I highly recommend you to use this insurance sort of a policy on the EverTrade Go app and of course on the EverTrade Web Trader as well. Now, what is up for agenda or the study questions for today? These are, we'll be starting with measuring the indices, what exactly is going on in the equity market space over in the United States, and of course over in America. And we'll be very much focusing on special China-related stocks such as Alibaba, which has seen a tremendous sell-off for the last number of weeks. And now we do see some really big opportunities as the market has been sold off tremendously over the last few number of weeks. And where do we go from here? In addition to that, we'll be also looking at some COVID-related stocks that have started to lose energy, and that means the selling opportunity is very much there in terms of those stocks. And we will also look at some stocks in the light of Federal Reserve meeting, which is taking place later on today at 7 p.m. London time. So that is going to influence companies like Bank of America, Citigroup, Goldman Sachs, and of course, it will also have influence on Barclays as well. Now, with respect to energy stocks, obviously we have seen pretty decent rally for oil market because now crude oil is trading back above that $70 critical price level, and Brent is trading at 75. What does that really mean for energy companies like Chevron, Exxon Mobil, Shell, and Total? And also, given the fact that we are back in terms of our lockdown, so what does that mean for companies like Amazon and eBay? At the same time, that booster shot is still very much the conversation among investors and traders. So what does that mean for Pfizer and Johnson and Johnson? In terms of airlines, we know that travel restrictions are being eased off on a worldwide basis. Over in the UK, we have seen another green list coming in a number of countries falling under that green list. Amber list no longer exists, or let's just say it will no longer exist from the 4th of October. We will only have green list and the red list. And on the back of that, we have seen pretty decent gains for airline stocks such as Ryanair, EasyJet, American Airlines, Delta Airline. So we will have a look at those ones, and also the companies which make them, like Airbus and Boeing. And for streaming industry, we've heard from Disney Plus this week, yesterday or day before yesterday, where the subscriber numbers came much softer as the the wow effect has kind of started to wear off. So where do we go from there onwards? What is next in terms of Disney, really? Disney Plus, and of course Netflix. Where do we see the Netflix stock really moving from here onwards as well? So does that make sense to you guys? Any questions in relation to that? That what are we going to focus today? Okay, Ursula, it's a good question. So the question is, what is the difference between stocks and currencies? Is stock a long-term trade or a short-term? Which one is better to trade in your opinion? So currencies are highly, highly volatile. There's no doubt about that. Stocks are a lot less volatile. Currencies, they represent countries, right? So let's say for the UK, the currency is sterling. For Japan, the currency is Japanese yen. For China, it is the Chinese yuan. For Australia, it is Australian dollar. For United Arab Emirates, it is the dinars, right? Not dinars, sorry, that's a Kuwaiti dinar. In Emirates, you have, oh, come on, it's not coming to my head. I'll tell you in a bit. What is the UAE? Dirhams. Dirhams, that is the currency in United Arab Emirates. And in Saudi Arabia, it is obviously Saudi Riyal. So in Europe, we have euro, and in America, the currency is called the dollar. Stocks are like for companies like Apple. You know, they have Apple has a stock. Uh, Caterpillar has a stock, Walmart has a stock, Amazon has a stock. That's just one company and their performance based on their outlook, how the stock is going to be very much performing. It's not a country. So stocks are a lot less volatile in comparison to Forex market. Forex market is a lot more volatile. So from day trading perspective, you will have much more opportunities in the Forex market as opposed to stocks. So I hope that answers your question. Now, let me bring out the MT4 platform, and we will begin the conversation by looking at the indices, right? Because that is what we kind of discussed, that we wanted to look at from the top, from top down. So look at, you know, the major indices, which way they are trading, and then we'll be looking at sectors and then stocks. So when we look at this particular S&P US Dow Jones Industrial Average, what we really see in terms of the Dow Jones Industrial Average is that this intense sell-off, which has been taking place for the last number of days. And that happened since the market sort of formed a double bottom. Now, you may be wondering how the double top was formed. The double top was formed when the market came into this area over here, and that was very much in line with this area. So the market formed a double top over here, And after that, we saw this massive sort of a sell-off into the market, and the market has tested this important moving average right over here, as you can see. This is your 200-day simple moving average, okay? This one over here is your 100-day simple moving average. And after that, you have your 50-day simple moving average. The general concept is whenever the price comes to 50-day simple moving average, it shows that the prices have become less rich. Now the prices are somewhat cheaper. Market is likely to bounce. As you can see from here, the market come into this particular zone. We saw that rally from here onwards. When the price comes near the 100-day simple moving average, as it did over here, that means it is even better opportunity to buy, and the prices are more likely to rally. As you can see over here, the price came again, and we saw this massive rally afterwards again. When the price comes over the near the 200-day simple moving average, this means that the prices have become way too cheap, and they are much more likely to move higher from their price perspective, from their price level. So as you can see over here, that the last time the price kind of came close enough to this 200-day simple moving average was back over here, or let's just say back in October to 2020, right? Now the price has once again visited this particular price level, and the chances are that we will see a massive rally from here onwards as the price is nearing its 200-day simple moving average, because before that it was back in 2020. So overall, the key takeaway from this particular price point or from this particular conversation is the markets are a lot more cheap now than they were before. In addition to that, if we pay attention to the RSI over here, level of 30 represents prices are oversold. We are likely to see price moving to the upside. Level of 70 represents over here the prices are way overbought, and we are likely to see a downward move in terms of that. As you can see that the price over here was close enough to that overbought area, the price moved to the downside, and the RSI also moved to the downside. Over here, if we manage it right over here, the price shows that the RSI was way oversold. And then after that, we did see this massive rally in terms of the stock market as well. Of course, over here, we had those extreme readings over here. We were looking at that reading of 15 RSI. And after that, we did see this massive boom, massive rally into the price action over here, which went all the way to here. And then after that, we had many different swings. So overall, the key takeaway or the conclusion is that the RSI is oversold. Of course, it is not as much oversold as this particular level, but back in September, the market was over here. Now the RSI has gone beyond that level, and it has sort of formed a double bottom over here, because this one and this one are more or less the same. So prices are likely to move to the upside, and the opportunity really exists as of now, as of today, really. So what is that opportunity? That opportunity is very much going to be defined by two particular price levels, and that is the low and the high of this candle over here. So this is the range that we are very much trading. If the price breaks above the high of this candle, that would be much more confidence in the market that we are moving to the upside. If the price breaks the lows of today, then there is less confidence, meaning the price is going to move to the downside, and it is going to come into this buy area, the big support zone area, which we are rating over here. And at that time, this RSI would have dipped even lower, possibly, and it could confirm that we are likely to move even more upside. But at the same time, the RSI could actually move to the upside while the price makes a lower low. That would be a further confirmation that the prices are likely to move to the upside. Negative divergence happens when the price starts to make higher high. So when the price starts, let me just draw that again. Negative divergence happens when the price starts to make lower low, but the RSI starts to forming higher high. When this happens over here, this means this particular price action is really going to see some explosive moves to the upside. That is your negative divergence. Now, from the overall market, what we have learned now is that the market is way oversold, and now we have an opportunity where the market can really move to the upside. So let's start looking at individual situations in terms of the stocks, in terms of the market, and then see where exactly do we have the opportunity. Now, remember, to begin the conversation, we started the conversation by speaking of the Chinese stock. Of course, you would probably know that a lot was happening in terms of China. China is breaking down in terms of its regulatory crackdown on the companies. It has put a lot of pressure on companies, and that triggered this massive sell-off in terms of the Alibaba's stock price, which used to trade at 328, now at 149. Really a great buy in terms of that. So where are those important big buy zones? The big buy zone area in terms of that is really over here, right over here where the price is really trading at. I'm looking at this particular price action, all of this price action. Price has entered into this area. So if someone wants to buy a Chinese stock, there couldn't be an even better time than now. First of all, we had this massive sell-off, then we had a little bit of a bounce, we had another sell-off, we had another bounce, then we had another sell-off, we had another little bit of a bounce, now we have another sell-off. So for me personally, will be very much increasing exposure in terms of Chinese stocks. Now I will be start buying Alibaba more aggressively as we go along now, and in this area of 148 to 128, I would certainly be putting some positions in terms of Alibaba, and after that I would be putting more positions in this particular price level of 107, because that is where the next important support level is very much trading in. So anywhere between that 107 to, let's say, 100, in around this particular area, I would be placing more orders. So if I wanted to buy 100 shares in terms of Alibaba, I would buy maybe 70 to 50 shares over here, or I would buy 50 shares over here. So that would be the one of the option. Or I could buy 25 shares as of now, and I could wait for the price to come into this area and then buy 75. But let's say if the price doesn't come over here and it starts to bounce back up, and then I see that I've only bought 25 shares, then I will buy 25 more shares at a slightly higher price and put my stop loss at whatever that low would be. Because if the price breaks below that stop loss, then I am ready to bring those shares back in at a lower price over here. That is what I would be doing in terms of that Alibaba trade. Does that make sense to you guys? Because this is very important opportunity. This is the biggest opportunity really in terms of the overall market that we have on our doorsteps. Any questions on that? Okay, so if you guys are clear about that, so let's move on to the next one, the next important one, which is going to be in the light of the Federal Reserve meeting taking place today, and that is Bank of America. Now remember, the Federal Reserve is going to be talking about its monetary policy, starting to increase its interest rate in the near future, and also started to talk about the possibilities of tapering off its quantitative easing. So in terms of opportunities, what we are really looking at is really a buying opportunity. In terms of this, is going to be the big buying opportunity is right over here. But let's bring in our moving averages, because our moving averages are very important in relation to the price action, because I love to put my trades in around that moving averages where they are trading. So I just put the 50 over here. Now I'm going to put 100 at the same time as well. So see where that 100 is really trading. So 100 is over here. And then I'm going to bring in the last one, which is your 200-day simple moving average. So let's change the color to green and then see how far are we with that. So see that 200-day simple moving average has come very much in line over here. So if the price comes over here in the coming days or so, this would be very good area to buy, that $36 to $37. And in terms of our profit taking, we would be very much focused on the all-time high of that one. So today, this particular stock is going to be very, very volatile. We are going to be focused on the lows of yesterday. If it breaks the lows of yesterday, we are highly likely to be coming over here, and this could be a great area to buy. If it breaks above the highs of yesterday, sorry, the day before yesterday, or this particular one, then this could be an opportunity to buy by placing a stop loss just and over here on this point. If it breaks above the high of this candle, like 39, that could be your entry point, placing your stop loss over here. Your potential loss could be just that much, while your profit is going to be that. So we will have that more than 2 to 1 risk to reward ratio. So Razwana is asking me about the stop loss in terms of Alibaba. I think right now Alibaba is a great opportunity to really buy. As we mentioned, to rewind this video, I've given you the answer for Alibaba's stock price in relation to that. So I would recommend you to do that really. Now, in terms of a Bank of America, again, this is our support area. This is where we are waiting. But if the price breaks to the upside, we would put our stop loss right below the low of this particular candle. And then we will target this area. This would be our stop loss over here. This is our take profit area right over here. So again, this could be a great opportunity on the back of the Federal Reserve meeting, which will be taking place today. The stock is without any doubt likely to see higher volatility going into this one. Now, something else in relation to overall trend, given the fact that the economies are opening up for Amazon, we have started to see that this particular, let me just, what is going on over here? Let me just make sure that bar down should be red, bar bear candle. Okay, there you go. Okay, so in terms of this, what we're really looking at, again, I'm just going to get rid of some of the lines. I don't want it to have a grid, just get rid of the grid. Okay, so what we're really looking at in terms of Amazon is, again, we're going to put our indicators, our moving averages over here. So first we will put the 200 now, then we will add another moving average, which would be our 100-day, and we will change the color to orange. So let's put that 100-day over here. So you can see that the price has tested the 200-day simple moving average very nicely in the last few days. And now we'll be looking at the 50-day simple moving average. And we're going to change this one to pink, right? That's the one. All right. So what we're really looking at in terms of Amazon is the big supply zone, the big area of supply zone or the support zone. That is just right over here. So between 3,171 to 3,279. The price has very much come into this zone just above that 200-day simple moving average. Now, in terms of the opportunity, now listen to me very carefully. Here is the opportunity. We are going to put two lines, one above the high of yesterday, one above the low of yesterday. If it breaks to the upside and moves to the upside, we will have our stop loss right over here, and we will target this area over here, all-time high. If on the other side, again, high and low, price breaks below the low of yesterday and it goes down, this will become our stop loss right over here. But this trade again isn't going to be that really good. Why? Because all of this is our buy zone, is our support zone. So I would only take this trade in two circumstances. If it breaks above the highs, then I would certainly take that trade on the long side. No problem with that. Otherwise, on the long side, I'm gonna be only waiting if the price comes into this area of support between 3171 to 3279. So only two possibilities: breakout out of this one, again to go long, or wait for the price to come into this area of support, let the price come over here, and then buy or take the long position to go to the upside. So there isn't really a short opportunity, a great short opportunity in terms of Amazon. Are these on US time zones? Yes, everything is on US time zones. Great question. Okay, let's move along and then do one more or a few more. Okay, Exxon Mobil. We all know that the prices have been moving higher in terms of crude oil, right? Now, where is the price moving in terms of these stocks? Now, once again, let's bring out our moving averages. So moving average number 150, insert another moving average number 2 is going to be what? This is going to be 100, and the color is going to be orange. Let's put the third moving average, and that is going to be what? Your 200. Okay, and then this is the color is going to be what? Green. Now, where the price is trading, the price has already dropped below this particular one. Now, although we do see that crude oil prices have moved higher, but this particular momentum for the last few days, what we're seeing over the last few weeks, is very much to the downside. We are not seeing a major move. Yes, we did see the price moving to the upside since October last year, and we did see this massive rally. We saw the one top, we saw another top, we saw the third top forming over here. But ever since, what has happened once the price formed this particular top is the price has been very much trading to the downside. If we look at the crude oil has been trading to the upside consistently, very much so. So what really this means is that this has no relation, this has negative relation with the price, and the price is moving to the downside. So where are our buy opportunities? Because someone is asking me to look at Apple. Our buy opportunity in terms of this one is very much going to be coming in over here, number one. Number two is going to be coming over here. Remember, these companies are going to change their business models on the long term. They are going to go into green energy space. So they've been looking at to buy those plants, the green energy plants, so that they can provide green energy to cost. So long-term basis, this area is support number 140 to 42 or 50 to 50, 48 to 52. So these are the two areas that we wanted to focus on in terms of buy zone. Now, someone has asked me to look at Apple. So let's look at Apple quickly before we finish off into this one. Let me see if I can find Apple stock. Do you see Apple somewhere over here? If you can see it, just let me know. Just trying to find that. Ah, this is strange. Here we go. This is Apple, and Apple is trading above its 100-day simple moving average. Where is the big buy zone? The big buy zone for me is going to be just over here. This is going to be my big buy zone area number 1. So just over here, looking at this consolidation area over here. So this is my first buy zone area number 1. In terms of a strategy of the market, again, look at the highs and the lows of day before yesterday of this one. If you wanted to take a long, if the price breaks to the upside, put your stop loss over here. Otherwise, if it breaks to the downside, the short position does exist, and wait for the price to continue. Take the short as the price takes below of this one. Your stop loss becomes this one over here, and your target becomes this one. So let me put those writings again on the chart just to make things clear. So if the price breaks to the downside over here, your entry becomes the moment the price breaks below the low of this one. This one becomes your stop loss. Your take profit is where your 200-day simple moving average is trading. All right, guys, this is where we call it a day because the time is up. We will see you guys with more information next week, same time, same place. Until then, enjoy and happy trading, and I'll see you guys soon.